Good afternoon and welcome to BizTech's Asian Midday Market Watch, presented by the Smart Investor Singapore. It's our year-end series where we look back at 2022 and look ahead to 2023. And with us is Jessica Amir, market strategist at Saxo Capital Markets. Jessica, good afternoon.
Hello, Brian.
Now, Jessica, for a start, could you share with us perhaps and unpack some of the drivers for markets in 2022 and 2023?
Well, without a doubt, 2022 was all about driving higher inflation, runaway inflation, if you like, and that fueled on higher interest rates. And as such, that put a real dampener on tech stocks and particular EV stocks. So stocks in these sectors suffered the most. So we saw Rivian, Tesla, Lucid, all of those names down 60 to 80%. But of course, tech stocks also suffered a heavy hit as well. Zoom, PayPal, Meta, their shares losing over 60%. We've got to remember that tech companies, their forward earnings are tarnished when interest rates rise, but also they suffered less earnings, and as a result, their profits were squeezed at a time when costs were rising. So they got a beating with the ugly stick. However, I guess the question is for investors, what does it mean for 2023? Well, we don't really think that they could recover until the Fed basically rings out the wave to say that they could potentially pivot. Then that could be a catalyst for those tech stocks rebounding. But then on the flip side, Brian, we did see the best performers being in energy, and also secondly, those that are facing the Chinese economy. So we saw the energy crisis really pick up, and the oil price was up and down like a yo-yo. So it rallied up 70% up to March, and then it fell 40% from June. So all in all, it's ending the year pretty much flat, but that doesn't take away record high earnings and profits for some of the energy companies. So that meant that stocks like Occidental Petroleum, also, we had Devon Energy, ExxonMobil, their shares were up about 120%. And also coal stocks doing particularly well as well, Brian. So coal stocks were the best performers across the world, across all the global share markets. And that's because the coal price, Brian, rose over 150%. So we saw coal stocks like Whitehaven Coal and New Hope Corp rise 305 and almost 200%. So their gains can't be replicated. And as a result, I guess what contributed to this was their earnings was in the high triple digits. So for 2023, what do we think? Will these energy returns continue? Well, probably so, particularly in the coal space. We think we've got to reflect on historically the coal price usually peaks in Jan. So that means the gains can likely continue into the new year for those coal companies. And then, of course, we head into European and US summer, so we're likely to see a pareback of the coal price, and that means that their shares could pull back as well. So that's something to keep in mind. Also likely to see continuation of stronger share price growth in the energy. So oil and gas companies are expected to continue to drive higher as there's an expectation that the oil price will move up. So that was a very long answer, but there you go.
Now, I want to add to that, though, because defense stocks did really well. Also, cybersecurity within the tech space itself, cybersecurity stocks did really, really well. Are you expecting at Saxo to see these two sectors performing well in the coming year as well?
Yeah, so cybersecurity is a really interesting one, as well as defense. So we saw this sector really see a huge heave-ho in earnings, and that's because, of course, of the war against Ukraine. That really saw fire put under, I guess, the NATO alliance, and the NATO alliance was essentially asked upon the 31 or so countries to increase their spending to defense and cybersecurity to be over 2% of their GDP. So that means companies like Lockheed Martin, Raytheon, they saw high earnings, and that translated to their shares also outperforming the market. The reason that we think this trend could continue is not only because there's more pressure on these global economies to increase a proportion of their national spending towards this area, but also particularly in cybersecurity. So the US House Secretary has particularly warned that Asian countries, as well as Australia, but across the Asia Pacific, will likely be hit the hardest by cybersecurity threats in 2023. So this really drives the need for companies and economies to increase their expenditure in the cybersecurity and defense sectors. We've got to remember defense companies aren't just heavy artillery, machinery, missiles, etc. It's also cybersecurity. So if you think about Lockheed Martin, for example, Lockheed Martin, most people don't know, but they're a global leader in cybersecurity, I guess, if you will. They patrol a lot of the airspaces and also not only in the Asia Pacific, but also in the US as well. So this is something that we think is probably going to continue, and we're really going to keep our finger on the pulse of the defense and cybersecurity sector.
Now, Jessica, on that note and those great insights, thank you very much for coming on the show, and thank you very much for your insights. Have a fantastic 2020, rest of the 2022, and I look forward to speaking to you again in 2023.
Thank you so much, Brian. Have a wonderful new year, and can't wait to chat to you in 2023.
We've been speaking to Jessica Amir, market strategist at Saxo Capital Markets on BizTech's Asian Midday Market Watch, presented by the Smart Investor Singapore. I'm Brian Fernandez. Please check out this interview on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.